sister. Okay. Tell me when you see us. Do you see us, Marquita? Oh, there we are, live and in living color. I always have to give a disclaimer each Saturday morning. I'm in the office with the dogs, and we had the guys out here cutting the grass. So I think they're gone. But my dogs have a tendency to bark, as I'm sure you have experienced. So I will do my best in keeping them contained. Anyway, good morning. Good morning.
Good morning.
So just before we started, you were mentioning that today is Devin's last game. That's super exciting. So he's a baseball star, and as you know, that's probably, if I were to choose a sport, that would be my favorite sport.
Awesome. Awesome. Well, you know my favorite sport, and that's not it, but it's all good.
All good. It's all good. Well, it's great to see you again this morning. And we're going to talk about, I just wanted to ask you a couple questions this morning about the luxury market and what type of financing can a buyer, purchaser expect if purchasing a luxury home. So what type of financing is out there for folks that are in the luxury market? And when I classify luxury market, let me just give some context here. So, for example, in Northern Virginia, we have 10 luxury home markets. And unfortunately, Prince William County is not considered one of them.
Oh, wow.
So the top 10 would be, as I'm sure you would probably guess, would be McLean. We've got Great Falls, North Arlington, and we got McLean, Great Falls, Old Town Alexandria. You've got, again, Courthouse Clarendon in Arlington, the Plains, which is actually in Fauquier County,
Okay.
Charlottesville area. There's a section called Whitehall, of course, Virginia Beach. And then there's a town that I'm not familiar with, but apparently it's relatively close to Charlottesville. And that is called Crozet, Crozet, Crozet or Crozet, Virginia, which is a little small, quaint town, which is interesting because apparently their crime rate is very low. And it's just about 12, 13 miles, I think, south of Charlottesville. So, but that's what makes up the luxury market. And when we talk about that, for example, in the McLean area, you're looking at about, they've sold more than, 2 million and, 2 million, they sold homes for more than 2 million and that's their price point. And that accounted for like 14% of the home sales in this particular zip code. And I'm talking about in McLean. So just to give you some context there, but in Fauquier County or in the Plains, there were only 6 sales. And I'm talking where they were last year. Of course, sales have increased this year. So the luxury market has increased, believe it or not, where seemingly things had a longer span on the market, things have increased,
Okay.
especially demand for houses. And I see a lot of experts, to include Zillow. People consider them as an expert because they do monitor our market. CoreLogic, some of the other experts do foresee us going into 2021 with prices continuing to increase because, again, the demand is there. There is still low inventory and greater demand. Just put a house on the market this weekend and had multiple offers and was gone in a day. But
what was that price point?
But then that price point, believe it or not, that price, and I was surprised, that house was at 500. It was over 5. It's about 5.5, 550. So a $500,000 home. And that was actually in a different county. That was a little further south from Stafford County, which I was surprised at that price point for this particular home. We had some conversation about a home in an area, just looking at, from the time that a home was purchased at the beginning of the year to date, there was some level of increase, even without any improvement. So that again speaks to the demand for houses and buyers willing to, pay above. So, I was actually in a class, and the national average, which I understand, and don't quote me on this, but from what I understand is on the national level, your what's considered luxury is of course above 500,000, but obviously when you drill down into particular areas, for example California, or you just take our area, as I mentioned, over in McLean, homes are selling for above 2 million. um that just it just depends on the region or the location, obviously, but let's just keep it to our area. And so if I'm in the market for a luxury home, what type of financing is available? I know prior to the pandemic, or when we hit the pandemic, a lot of the financing and things shifted. Can you speak to that?
Absolutely, absolutely. So prior to the pandemic, um, the jumbo market still is a very highly scrutinized market because of the actual sales price. And those sales prices don't fit into what we call conforming or agency loan types, which the agency loan types would be FHA, VA, conventional, uh, USDA type of financing. So when you're looking at jumbo products, you have basically specialty lenders that play in that area. When you start talking about homes in the 2 million range, many of these people are going to have to go to an actual bank, their private bank for funding. You're not going to see as many buyers obviously qualified, in that range, because that is just a specialty type of area. So during the pandemic, when we look at loan amounts that go above 765,600, then we're calling it jumbo prices. So luxury and jumbo kind of go together as far as how we classify the money. So anything above 600 is jumbo. When the pandemic hit, I would say 99.5% of every lender that was in that market pulled out, because already you're talking a higher risk, a higher price point, longer to sell those homes. If they were to foreclose, to liquidate that property may take a lot longer because you have a smaller pool of buyers that qualify at that price range. So jumbo money starts at 765, 600 above. So 765,
Okay.
601 and above. And we've seen that lenders have come back into, the market as far as financing is concerned. These are not loans that can be done with no money down, but I do have one caveat, little secret that I'll share about a no money down option for jumbo financing,
Do
which you'll
tell.
be
Do tell.
probably surprised at. Yeah, so we're looking at least a 10% down payment for borrowers looking to go into the jumbo space. Like I said, for self-employed, already highly scrutinized, going to be scrutinized even more, must have the 2 years of tax returns as well as audited profit and loss statement to show that the business is still thriving during this time, coming through with the pandemic. So most people are looking at least 10% down. You have some lenders that cap their loan amount at about 1.5 million. You do have others that will go to 2 million. Does require excellent credit. And when I say excellent credit, I'm saying above 720. Anything below that is going to be hard pressed. Now, I'm not saying that you can't get it done. You do have some lenders willing to do it. However, it's going to be high risk, and it's going to be a higher rate, and it's going to be a lot more paperwork to make sure that you are credit worthy in that space. So anybody looking to finance above the 765, 600 needs to at least be prepared with 10% down. In some cases for self-employed, we're starting at 20% down. So these loans are not loans that we typically close as a company. We're working with investors on the back end, and that's what sometimes is best, just to I have to say it, go, deal with financing with your bank, who possibly can do lending based on maybe assets that you have in your account. When you're buying a home at $2 million, more than likely you are going to have a private banker, so that is somewhere to start. Just to kind of reiterate, though, as far as jumbo and luxury and what is defined as luxury, like I said, for us, anything over 765, 600 is going to move into the jumbo space. So Prince William County may not be a place that is considered a luxury area, but there are actually homes that sell for, higher than that amount. And those borrowers need to either look at, putting 10% down or putting money down that brings the amount back into the conforming space. So that is something to look at when we're doing a 720,000 purchase right now, but they're still able to get money from agency. So no, Prince William's not luxury, but they still have homes that need jumbo
They do
financing.
have some,
We're here to
absolutely.
help. Yeah, we're definitely here to help. So
Absolutely. So let me go back. So this particular program, this is something that you all offer, that 10% down for the jumbo money, for jumbo loans.
that is correct. So we do offer a jumbo product that's 10% down. We are capped at 1.5 million, but a caveat of that, this loan has no mortgage insurance. So typically, if you're not putting 20% down or you're not a veteran, you're going to run into some mortgage insurance. So we have a jumbo product up to 1.5 million, no mortgage insurance, requires 70/40 score, and like I said, the 10% down payment. So
Okay, so you dropped something here. If you're not a veteran, so let's talk about that. Now, veterans, they're using VA financing. Is there, I mean, can you differentiate the two between the jumbo and the VA? Do they run together? Does that, or would a veteran have to step outside of his VA financing, or can he stick with his VA financing? And is there a cap on what veterans can purchase in terms of jumbo money or a home?
excellent. Excellent question. At the beginning of this year, I don't know if you recall, but the loan limit for VA loans was removed by the president. I can't remember the name of the act. So loan limits were removed for veterans and VA loans. Now, VA doesn't do loans. Lenders actually do loans. So it's like they have to decide their threshold of how much money they want to lend with no money down. So we have found the cap to be for us is at 1.5 million, no money down for a veteran who has all of their entitlement in use and not in use. So they have to have all of their entitlement, meaning they can't have another property that has entitlement in use and then try to buy no money down. So no limit. The lender's threshold that I'm seeing is up to about 1.5 million. You do have a couple that will stretch out to the 2 with no money down, which I don't recommend it, even though that is an option and there is no mortgage insurance on that for veterans. So you almost say, unbelievable. I definitely can't see it. Now, in the past, I have helped borrowers purchase $1 million home in Fairfax using their VA loan, and they were quite surprised because on the conventional side, they were going to need to put 20% down. We were able to use their entitlement, and they did have a down payment, but it was significantly less. And that was to make up for the entitlement that we didn't have above the county limit, right? So it was because it was above the county limit. So
right. That was prior to the removal.
That was prior to.
Right. Okay.
So even still, you could possibly do that at the higher sales price, but you just have to know now you have a down payment for sure because some of that entitlement is already in play. So there's a little calculation that we do. A little, little Rain Man math. What that number is.
Kernanke. What's his name? Steve Kernanke or something to do with getting no sleep, doing the count. Okay, I got you.
Oh, yes. So that is definitely something that is available. Another benefit or feature of being a veteran and maybe looking to buy at, I'm not going to call it luxury, but the higher end.
Let me ask you this. So with that, staying in the same vein here, as a veteran, does the 720 credit score, is that just across the board or above for using VA financing, or is there a different guideline for veterans when it comes to qualifying? Like what do they need to have other than their entitlement?
That's an excellent question. Obviously, when you start going above county limits, lenders have what are called overlays. So it's not necessarily that the VA has put a credit score requirement because the house is $1 million. They have the lenders that have put overlays on financing at that price point. I don't know what ours is, unfortunately, right off the bat, but I would tell you it's definitely above 660. I know that for sure.
So 660 is the new for lenders, individual lenders.
Individual lenders. I mean, we're seeing the loan programs come back down. So we had got to a point that we were at 640 across the board to be eligible for any type of loan.
Mhm.
Now we've seen that go back down to 620 for some types of loans. And there's a birdie telling me that we're actually bringing back the 580 credit score, which is not really something I want to shout from the rooftop, because in my opinion, at 580, there's some work that possibly needs to be done. And we just need to make sure that we're totally vetting that scenario and we're not setting up someone to fail. And that's definitely something we don't want.
I'm not going to hit you with what can someone expect in terms of interest rates, because I know things are all subject
Definitely
to
don't
change.
do it.
Because I know
Don't
it's
do it.
all
Just know they're at historic lows,
individual.
specific individual, as well as specific lender, or what kind of uh, we call rate hits that possibly could be there. I'm still seeing VA loans under the conforming limit coming in anywhere from 2.375 to 2.875, depending
I
on
mean, I'm
the
blown
scenario. So
away.
the money is still,
Good.
it's not free, but it's great.
Yeah. Let me ask you this. So let's just shift just slightly, because since we're in this whole refi boom, if you will, how does that apply to the luxury market or the higher end homes? Are they basically, is there any differences than if, say, I were to refinance my house that versus someone who was refinancing a 1 million plus home?
They're just going to have to meet the loan to value requirements
Okay.
based on what they are. Typically, if you're talking about refinancing just for a rate and term, you pretty much can still go up to the 90%. But if you start taking cash out, different lenders have rules on what they want to do. And when I say cash out, that means taking some of the equity out
Mhm.
of the property and putting that in use in different ways versus just sitting in the home.
Yeah.
So that's going to depend on loan to value by each actual investor or bank. I would think you're going to be looking at anywhere from 75% to 80% loan to value as the cutoff. So it has to have some equity there to actually do a cash out.
Okay, great. Well, I appreciate the information. So one of my biggest,
Always.
yeah, I appreciate it. One of my biggest takeaways is obviously for jumbo money, it's 765,000 or more. The great thing is just a reminder that VA removed their limits, so that's good. Got to have at least a 720 or better credit score if you're in that jumbo market, and that your what is it? AFN has a 10% down program or product available to folks that are purchasing above the 700 or 765 or better, capping at 1.5 million. But you guys have some other things you may be able to throw in there to kind of assist if it's maybe a little north of that. Is that right?
That's correct. I mean, you have some other investors that was just a feature product that wanted to talk about. I mean, obviously, you start going higher, you might need to put more money down. And that product that you mentioned, the key feature for that for the luxury is there's no mortgage insurance at 10% down with the 740 score. That's pretty amazing.
That is awesome. That is very good, especially with that size of money. Well,
Exactly.
I appreciate you once again for our weekly Q&A. I hope for those that may be considering purchasing higher end properties, because again, just because the house is $1 million or 850,000 in Arlington, Alexandria, or Fairfax County doesn't necessarily mean I'm getting this huge 12 bedroom, 14 bath home with a pool and a jacuzzi and all of the wonderful amenities and an elevator. However, that is our market. I mean, that's just where we are with the location of where we are versus, say, if we were in somewhere in another state or somewhere further south from where we are, um, which would constitute maybe that level of home, because I think we could probably get that 12 bedroom house. No, actually, was it about 3 million? So
Yeah,
3 6 or
it
something
was
like that.
like 3.5 million and 5 million. It was a huge range on how much that house actually was worth, but I
Yeah,
could see it. I definitely could see it.
yeah.
Yes.
Well, once again, I appreciate you. We'll see you guys next week. Thanks to everyone who chimed in. I didn't even look to see if we had any questions, but always great 20-30 minutes with you Saturday morning. I wish Devin a fabulous day, and with it at his game. I hope win-win. Go Dev.
It looks like he got a single, but the next person grounded out. So it's top of the third. They're losing right now, 8-2, but we'll see
Oh,
what happens.
so he's actually there playing now.
He's actually playing right now.
Oh, okay.
Yeah, so they, technology, they have an app where if you're not at the game, you can actually see what's happening. You can't see the players, it's a digital app, but it shows up who's up to bat. It shows if they get a single, if there's a ground out. So, and if you're on defense in the outfield or second, they show where the players are. So it's pretty cool. I'm keeping up with that. I have another appointment today, so just wasn't able to make it out, but wanted them to
Okay,
win
that's
so
where
we can
team
make
effort
the
comes
second.
in. There you go. There
Yep.
you go. Well, tell him when he gets in, whoop, whoop, I'm one of his biggest cheerleaders, his fans. So I wish him well. And that's great. And that's the great thing about technology, is always evolving. And one thing about this pandemic, it certainly has forced us to be creative and think out of the box and maybe push the
Yes.
envelope in different areas, whether with respect to either technology or in other areas in our lives. So thank you. I wish you a great day. Have a great appointment. And I'll catch up with you on the next round.
All right, we'll see you.
Peace.